Papua New Guinea and welcome to another episode of Business PNG. The 32nd Australia-Papua New Guinea Business Forum was held last week in Cairns, Australia. Delegates from both countries attended the annual event to strengthen bilateral ties and to discuss investment opportunities in both countries.
We begin by acknowledging.
The theme of the forum was Today's Investment, Tomorrow's Returns, described to reflect an important stage reached in Papua New Guinea's economic and social development and in the bilateral business relationship between Australia and Papua New Guinea. Addressing the forum, Prime Minister Peter O'Neill said that a forum like this reflects a strong confidence, which he states his government has demonstrated.
Papua New Guinea is Australia's largest investment destination and one of the largest trading partners. No doubt Australian businesses have made a significant contribution to the socio-economic development of Papua New Guinea since 1976. In light of the current global economic climate, the theme Today's Investment, Tomorrow's Return is probably not so much about stages of development, but more to do with the economic cycles that we have. In Papua New Guinea, we have an economy that has been experiencing a positive growth over the past 14 years. Our economy has grown at an average of 9% per year between 2012 and 2015, which makes us amongst the highest in the world, particularly in 2014 when we experienced 13.3% growth.
On her part, Australian Minister for International Development and the Pacific, Concetta Fierravanti-Wells, emphasised that Australia and Papua New Guinea's economies are most diverse and are the largest in this region. She describes the importance of a secure, predictable environment and to continue diversifying our economies to ensure returns, especially in times like this.
Our two countries are the largest, most diverse countries in our neighbourhood, the vast Pacific. For this reason, we help set the stage for how the world sees and engages with our region. Our stability, our prosperity is important for us and for all of us and for all our neighbours. And hence, a strong, vibrant business sector is an essential ingredient. So this relationship, the Australia-Papua New Guinea relationship, is particularly important to me, for our government, and today and for the years ahead.
On the topic of the PESA Plus trade agreement, Prime Minister reiterated that the issues PNG has is that the agreement is designed for more smaller Pacific Island nations. Papua New Guinea's economy, he said, is uniquely positioned with Asian economies, coupled with growing access to European markets.
The proposed PESA Plus agreement is an issue that has received a great deal of attention in recent months. Papua New Guinea, as you know, has got some issues with PESA Plus, and we see that these issues are very core to the national interest of Papua New Guinea because of the unique position of our economy. Clearly, in terms of size, we differ greatly to our smaller Pacific Island partners. And of course, our relationship to the Asian economies and encourages us to take a different approach. Papua New Guinea is more interested in a bilateral agreement with Australia that will serve our mutual trade interests well, as opposed to an agreement that is going to have a negative impact on our trade arrangements between our two countries. As our Trade Minister and his officials have said and will pursue, the trade agreements with Australia and with New Zealand that are similar in nature to the agreements that we have with the European Union.
The Minister for International Development and Pacific also acknowledged Papua New Guinea's position on the PESA Plus deal and confirmed that both governments are working together to ensure that the conditions are addressed. Importantly, Mrs. Fierravanti-Wells highlighted investment in women. Tapping into this resilient resource, she says, will open up opportunities.
Too long, half of Papua New Guinea's population has not had the support or ability to participate in growing the country's economy. This is changing, but there is more to do. Tapping into this resource of resilient, smart women in PNG opens up more opportunities across the economy more generally, with everyone standing to benefit. There is also a critical role for the private sector in this pursuit. The Business Coalition for Women in PNG is forging a new discourse about the positive commercial bottom line that can be achieved by supporting women in the workforce.
The Papua New Guinean national government has been heavily criticized by think tanks both domestically and abroad over the state of the economy. But it has assured businesses and the PNG people that the economy is being managed well. It is stable and the foreign currency will be improved in the weeks to come. The criticism is due to a lack in foreign reserves as well as the trading ban placed by the Bank of Papua New Guinea. These restrictions are affecting how businesses pay for services offshore. Criticisms raised by the business community have reached the national government and is acting now to fix the lack of foreign currency in the central bank.
It's been almost 2 years now, and the lack of foreign currency in reserves is taking a toll on business operating in Lae. Lae manufacturing companies are laying off workers and operations are trimming down.
Because of that, some companies are doing it tough. They're laying off some of the workers, but some of them are really looking at whether they can keep going. And we've got to look at the history of the manufacturers, that they really started in earnest to operate in the 1980s, 1990s. Before that, goods were imported as finished products.
Lae Chamber of Commerce President Alan McLeay spoke out for Lae manufacturing companies that are struggling to secure foreign currency to pay for bills overseas. There is a backlog of outstanding payments that need foreign currency from the central bank.
So in real terms, the Lae's got the name of being a manufacturing centre. Lae manufacturers import goods to put into their manufactured products. They have built up a very good relationship with suppliers because of their on-time payment in the past, and so overseas suppliers have let them probably extend the terms of repayment, but you can't do that all the time, and it's getting close to the stage where a lot of companies won't be able to import goods because of their shortage of foreign exchange.
The central bank reports that foreign reserves at present were $1.7 billion, or 10 months total import cover. But the backlog still needs to be cleared for free flow of trade.
Looking at this period this year, by end of this year, we should be able to resolve this issue. We are very positive that we got some options on the line to be able to support the private sector, the clear of the import backlog that we have.
Bank of Papua New Guinea Governor Loy Bakani, speaking at the Australian Papua New Guinea Business Forum last week, said temporary foreign currency facilities is being sought in external sources to fix the backlog of foreign currency.
We all have to find ways to look at it, and we are very much determined to get as much as foreign currency in as soon as possible to clear the backlog of foreign exchange orders.
The opposition has called on the central bank governor to come out and state whether the seeking of these external sources has been successful and what are the plans if they are not successful.
We want them to come out and tell us, how is the negotiation going? Has any deal been struck? If not, when? If the deal has failed, we want to know what are the other measures in place that the Prime Minister will come to put into place to rescue our economy, and also especially addressing the depleting foreign exchange that we currently have. We know that most businesses in Papua New Guinea have a backlog of 2 billion going 3 billion of overseas purchases that they can't secure currencies.
The main concerns are manufacturing companies like Lay's KK Kingston that started in the early 70s. These businesses are producing goods on shore when they import their raw materials from overseas and provide employment for Papua New Guineans. On the 1st of last month, KK Kingston CEO Michael Kingston pleaded with the national government to fix the problem.
It'll allow business to continue as normal, and right now it's like trying to run through honey. It's nearly impossible because you just can't get the money to pay your suppliers. So I plead with the government. We have to do something about this foreign exchange crisis.
The Prime Minister, Peter O'Neill, says the national government is listening to the businesses operating in the country.
Of course, there are issues which we hear from the business community loud and clear, particularly in the availability of foreign currency. The central bank governor will be speaking later today, and of course he will expand on this issue. But I can assure you that in the coming weeks, you will see an increasingly improved foreign currency availability, and we thank the commercial banks who are working closely, particularly Westpac, ANZ, and BSP, and Kina, who are working closely with central bank in addressing this issue with government.
While the debate is certainly alive domestically, with opposition being very vocal about the problem, Prime Minister O'Neill, while addressing investors in Cairns during the Australian PNG Business Forum, said the economy is stable.
We are managing our debt levels. Let me tell you, today it remains well below our debt ceiling of 35%. In fact, it is 28% with the new GDP numbers that has been released, which remain at about 18 billion kina for this year, out of which 4 billion kina is foreign debt, largely concessional debt. In fact, if you look at the numbers in 2015, just over 90 million kina was paid to pay foreign debt servicing in that year. So we have also adjusted our own spending, government spending, trying to increase efficiencies in our government systems. We have listened to the business community. We are continuing to listen to how we can improve our systems so that we can help the business sector.
The tussle of words over the state of the economy continues to draw attention domestically and abroad.
If we cannot prop up any help for the foreign exchange, which is depleting, and it's at the lowest at the moment, we understand that they may be having at least 700 to 800 to 900 million kina left. And we know that the central bank is now rationing the funds. They're giving rations to businesses to cash in to buy currencies to import. But at the moment, it's very expensive, and most companies are closing down its doors.
From 2012 to May 2016, the foreign exchange reserves also declined by more than $2 billion to a current level of reserves of 1.7 billion. As I mentioned earlier, given the low level of external debt and debt service payments for government, this decline in reserves reflected the intervention by the bank to support totally private sector foreign exchange demand. The central bank has to continuously balance the foreign exchange needs of government, private sector demand, and ensure it holds adequate levels of reserves. The current level of reserves, as we speak, is sufficient for still about 10 months of total imports and 15 months of non-mineral import covers.
Now on to some news bites. In a deal that may potentially see the creation of Papua New Guinea's very own oil and gas giant, Oil Search recently made two major announcements. The first, a proposed acquisition of 100% of Interoil in a deal that is worth approximately 6.5 billion kina. And secondly, a memorandum of understanding between Oil Search and Total for the sale of 60% of Interoil's stake in Petroleum Retention License 15, as well as 62% of Interoil's exploration assets to Total.
A joint statement was released this morning informing the market of the proposed acquisition of Interoil's business by Oil Search. According to Oil Search Managing Director Peter Botten, the acquisition is aimed at creating and delivering value for shareholders.
The first one is that the boards of Oil Search and Interoil have agreed to potentially merge the two organisations. So Oil Search will effectively acquire, issue shares in Oil Search for the acquisition of the Interoil company.
Furthermore, Oil Search has also announced that it has entered into a memorandum of understanding with Total for a back-to-back farm-out of Interoil's interest in PRL 15, which will see 60% of Interoil's interest bought off by Total.
The second deal that we announced today is we've acquired, as I say, potentially Interoil, but we've also sold down then 60% of the interests in Interoil's licences to Total, the French company, who already operate El Cantaloupe. So effectively what that does is it provides Oil Search with substantial cash. Total will pay us an equivalent value for their share, 60% of Interoil. It bolsters our balance sheet. It aligns Oil Search and Total in a program of development for El Cantaloupe and various ways in which El Cantaloupe development and Papua LNG can cooperate with PNG LNG.
These developments by Oil Search come at a time when the industry is suffering from a downturn in global activity, which have resulted in low world oil prices.
So we think it's probably 3.5 months before this deal could be concluded. It is an agreed deal between the two boards of the companies, but it's up to the shareholders to decide whether this goes ahead or not. So it's about 3.5, maybe 3 months between now and when we can finalise this. Yeah, I've always thought we were a national champion. We're just a bigger champion now if this deal goes ahead. And it gives us, as I say, a very strong balance sheet, gives us a very strong set of assets, and it gives us a great platform and program to develop the next phase of PNG LNG, the next phase of Papua LNG, and to be very influential in that process.
Oil Search is confident that through this acquisition, it is demonstrating the potential of doing business in the oil, gas and energy sector in Papua New Guinea.
This deal delivers us the keys to really drive our next phase of growth, optimising our own interests in PNG LNG and Papua LNG. And we've done it at a good, fair price for everyone.
In response to the previous story, the Independent Consumer and Competition Commission have released a statement sharing their concerns about the proposal.
The proposed acquisition of Interoil by Oil Search. There is a statutory process stipulated under the ICCC Act that requires any major acquisitions in this country, they're required to come to the ICCC. And we are concerned that we have not been reliably informed or made aware of that proposal until it came out in today's paper. Lately we realized this, that most of these business houses are just going ahead and acquiring one after another, or selling off shares to each other. And we've been very silent on this one because the ICCC Act has been it's not very mandatory for them to come to us, and that is why. So we've lately shifted this one to make it mandatory. So everyone will now be coming to the ICCC for any major acquisitions.
Despite first quarter market uncertainty in both domestic and international markets, Guinea Asset Management Limited recorded an investment gain of 1.4%, following on their 2015 net profit of 4.74 million kina. The POMSOX and ASX listed company held their 2016 annual general meeting in Port Moresby recently.
In spite of the country's volatile economic environment, Guinea Asset Management Limited has continued its momentum from 2015. Chief Executive Officer Sid Yates told shareholders that 2015 had been a period of great success and dramatic change for the company, stating that the 350 million kina acquisition of Maybank in September last year had doubled the size of the company's banking business.
The acquisition was vitally important for this organisation, creating a solid platform for the future. It provided us with a banking licence, which enabled us to source funds from depositors and investors at a lower cost than previously, when we operate as a finance company. It dramatically increased the scale of our business, with loans and deposits doubling in size.
The company recorded an investment gain of 1.4% or 0.7 million kina for the quarter, following an appreciation of the Australian dollar and the subsequent decline of the kina, depreciating to around 7%.
For Kina, it was a vote of confidence from the global investment community that this company was worthy of support, had experienced management in place, and capacity to deliver strong returns in the future. For the country, it demonstrated that the international investment community was confident in the future of the nation and was comfortable that the PNG banking industry was soundly regulated with healthy prudential standards and sophisticated operating practices.
Detailing the portfolio, Sir Rabi said that the company has maintained a larger international exposure in agreement with the goal of providing local investors with an international market. Commenting on the global economy, he said that growth is expected to be restrained as major economies continue to diverge. On the domestic front, the country is feeling the effects of the decline of commodity prices in the wake of the LNG construction era.
And that's all from us tonight. For more business news, or if you would like to view this episode again, visit MTV Online at the URL at the bottom of the screen. Or for up-to-the-minute business news and updates, like our page on Facebook or follow us on Twitter at Business PNG or on Tumblr. Until next week, have a pleasant evening. I'm Michelle Bird, and this was Business PNG.